Thank you for joining us for another episode of the Dealmaker Series. Today, I am joined by Sam Criales. He is the Business Development Officer at Bankwell. Sam, thank you for joining us today. Tell us a little bit about yourself and the bank.
Yeah, man, thank you. Thank you for inviting me. Appreciate it. And it's great to see you again. Sam Criales. I am with Bankwell. I am an SBA loan officer, lender, specialized in business acquisitions and real estate acquisitions. That's kind of in a nutshell what we do. Bank based out of Connecticut. Been open for quite some time now. $3 billion bank. We're ready to start doing a lot of SBA and ready to get in the picture and do a lot of deals this year. Yeah.
Excellent. So let's get right into it. Let's talk about this deal flow. What are you seeing in the state of deal flow right now? Is it increasing, decreasing, or kind of flat?
Not as much as we saw in the past couple of years. Deal flow has maybe decreased a little bit. The SBA made a few changes where shrinked the pool a little bit on the people that are looking to buy businesses and how to structure the deal. So the overall deal flow has decreased a little bit, but on the opposite side, it's the deal structure is actually better and the deal quality is actually better than I've seen in the past. So that's actually a really good sign.
Yeah. And speaking of structure, what kind of structures are you seeing more frequently now? Has that changed or what are you seeing?
That's changed a little bit just because of the changes with the SBA. We used to see often buyers coming in with a 5% injection and then having another 5% seller note from the seller. The deals have changed in the sense that now there's quite a bit more equity from buyer and seller. And I have seen a lot more sellers coming in with higher equities, 10, 15%. And then also including seller notes at 10, 15%. So the loan to value has decreased a little bit for the banks, which makes the risk a little bit less for banks. So, and that's why I'm saying in general, the deal structure has been better in the past couple of months than what I used to see in the past.
Any thoughts on what might have driven that decision from the banking side?
It wasn't so much from the banking side. It was the SBA side that made the changes. The administration made the changes. I would say to increase the skin in the game from buyers and sellers and spreading the risk of the deal to basically all the parties and not just the bank. So we went from having, a buyer coming in with 5 to a buyer coming in with, 10, 15% equity and also having equity from the seller as well. Again, just making sure that we have better qualified buyers enter the business acquisition pool. I think it's a good change, to be honest.
Yeah, that makes sense. And kind of de-risking the deals a little bit and having a higher quality structure going, or at least a higher quality buyer. What about industry or sector wise? What industries are you seeing as most active right now?
Most active industries I've probably seen the servicing companies, your HVACs, your plumbing, your cleaning companies. Those are the most popular that I've seen, recent months, really. It's been kind of a steady influx of those type of companies. I don't think that has changed much. They have been popular in the past 4 or 5 years, and they're still popular, mostly due to the fact that they are kind of recession proof. I mean, you have your HVAC breaks down, your air conditioning, you're going to need to fix it. Same thing, your electrical, your plumbing, whatever happens, you do need to get it fixed. And so tend to go towards companies that are recession proof and they don't have a lot of seasonality to it. So I think those are the companies that have been the most popular recently.
Has there been any, or rather, I guess, have you noticed any shifts around industry for DFW versus anywhere else in the country, or maybe in Texas versus anywhere else? Is there any kind of trending situation there?
No, I honestly think those are popular all across nation, and we do nationwide lending. So I get to see Florida, Colorado, California, and just overall these are the most popular companies. And again, just for the right buyers, right? I mean, you need buyers that have experience, that have licenses needed. Depending on the state, certain states do require that if you are looking to buy, say, an electrical company, you have to be licensed by the state. There's some states that don't require that. There's some states that will tell you if you have an employee or if you have a crew that is licensed, then the buyer doesn't need to be licensed. So it really depends on deal by deal. So that's what I've seen. But again, they're very popular due to their nature, just economy wise.
Yep. Okay. And what about economic forces? What are you seeing there as far as any impacts on deals?
No, other than rates are lower than they used to be in the past couple of years. They're trending down. We are expected to get rates to go down even a little bit further this year. I think that has impact deals and it made deals cash flow substantially higher. So it has produced better quality, better cash flow deals in the past couple of months. Yeah, that I have seen.
What about from the tariffs that we've kind of seen going back and forth in the last year? Has that impacted any of the business on the SBA level, do you think?
Yes, yes, a little bit. More on the side of buyers maybe holding off a little bit on pulling the trigger. Not so much on my deals that have closed yet. I haven't really seen or heard too much impact on those, but I have definitely seen a slowdown in buyers maybe pulling the trigger and waiting to see kind of what happens with external factors, economic factors mostly. But yeah, so it does have an impact. Again, it may have an impact also on valuations, because now buyers are projecting a higher expense in tariffs, or they want to have some sort of leeway on cash flow to make sure that if there is an impact, they have enough room to service the debt and then get their SE that they want to get.
What about there's been a lot of companies reshoring in the last year, probably because of the tariff situation, but I know that Texas in particular has seen some reshoring. Are you seeing anything along those lines, or is that kind of removed from where you're focused at?
I have not seen that, to be honest. That has not, yeah, at least it hasn't come up yet. But yeah, that's something good to look out for. And again, it's mostly, so these tariffs have impact transactions in the past, say, 6 months or so. And so the valuation of these companies, they're taking that into effect, and it's impacting their value, but for the long term, not in the current term. That's what I have seen. That's what I have seen buyers do. So again, not a direct impact, but more of a long-term precaution, I guess.
So let's look into the future here. I mean, we're in Q2, so there's a little bit of runway left in this year. We're at the beginning of Q2 actually right now. What do you see coming next for the M&A community?
Yeah, still very popular. I would say 85 to 90% of my deals that I have in the pipeline right now are business acquisitions, with a few real estate transactions. Again, 80 to 95% or 80 to 90% are all business acquisitions. I know the community is very active. Buyers putting in more down payments, sellers having skin in the game, with higher seller notes, 10 to 15%. Cash flow has been getting better because of the lower rate, and so I definitely see a substantial increase in transactions. I mean, I have seen it, and I expect it to be quite a bit higher. So, hoping to have a great year, especially in the business acquisition side of things.
Where do you think deal count may fall compared to maybe last year or 2024? You think it'll be higher or lower?
Probably a little bit lower than last year, but not that much lower. So what did I closed up? I think I closed $65 million last year, and 90% of that was business acquisitions. I'd expect that to be about 50 million this year. So again, a little bit lower, but not that much lower. And again, better quality, higher deals. That's what I like the best. I'd rather have less volume, but better quality deals, just for everyone, for the sellers, for the buyers, for everybody, to have a much better quality,
Absolutely. Absolutely. Hopefully we'll see a higher deal count. Hopefully we'll have a surprise to the upside. I think that would be great for everybody. But anyway, Sam, I appreciate your insights here. Those watching, you can find more episodes of the Dealmaker Series on the YouTube channel or follow me on LinkedIn. Sam Criales. Thank you, sir.
Thank you, James. Appreciate it. Thank you for your time. Bye.